Welcome to the Be About It podcast. My name is Ben Mercedes, and I'll be your host who will cover financial and crypto markets, real estate, and entrepreneurship. My goal is to inspire others to be about it and take action. Today's guest is Nick Chow, the founder of Us First Heard. We discuss the stock market, trading stock options, option strategies, cryptocurrency, and more. Make sure to comment, like, and subscribe wherever you listen to podcasts. All right, Nick, thank you so much for joining us today on the podcast.
Thank you. Thanks for having me, man.
It is a pleasure. So I wanted to have you on just to talk about stocks, stock options, and learn a little bit more about Us versus Heard. So why don't you tell us about Us versus Heard and what you've been up to lately?
Sure. So Us versus Heard really started off as I started it in 2017, essentially, and was really kind of like a side project just to kind of document my trades and the journey that I'm on. Because as you know, like when you're investing or trading, it's a ride, you know?
Yeah.
So I was like, okay, well, I'm gonna record my stuff, kind of make like a journal, basically like a video blog / journal for myself. So I can go back and be like, hey, what did I do back then? How was I responding to the market? What was I doing when this was happening or this event happened? I can go back in time and kind of see like what was my reaction to like tariffs on the China trade war? What was my reaction to different things? How did I make money? Did I lose money? Was I, and obviously as a trader, no matter if you're there for a month, a year, 10-year veteran, 30-year veteran, you don't know what's going on most of the time. You're
right.
you're always learning, you're always adapting because I mean, as the market is moving like up or down, I mean, there's different catalysts. I mean, there's automation now, as you know, with crypto, there's just so much like we don't really know, especially like with Tesla, like we don't really know in 10 years what that actually means, and how does the market price that, or how does the market price Bitcoin or ETH or any other Litecoin, whatever. How does the market, why is the market pricing Tesla the way it is? So I really wanted to create a platform to document my trades essentially. And what happened was all these people started to come and was like, hey, I liked the way you trade and I identify with what you say and your risk analysis, because like in options trading, and I guess you probably get that a lot like in crypto too, but in options trading is a very gambler mentality. And my mentality for options or investing in general, whether I have stock or options or crypto or I'm trading futures or I'm trading currencies or precious metals. I mean, I trade pretty much everything. Really, it's like when you see the Google ads, YouTube ads, all that stuff is like, hey, make $1 million. All you have to do is follow this one simple strategy. It's going to be great. And my mentality is like, hey, that stuff, I mean, unfortunately, people can't see through that for some reason. They just I think what happens is they're like, man, I'm so sick of my 9 to 5. I'm getting paid $8 an hour. And I'm so sick. And this guy on here is telling me I have to learn one chart pattern and I can make $500 a week. Bro, sign me up. I'm ready to go. But then you find out it's like, actually, that doesn't really work ever. So my mentality was like, okay, with options is risky. Options, if you don't know what you're doing, is very risky. And my mentality was going, how can I use this as a tool? Like the way that I view options is more of like like Lego blocks to investing, really like with options, you can build and you can transform, like you can have a losing position and through options trading, you could turn that losing position into a winning position. Or maybe I'm up a lot of money on my stock that I know that I'm going to start hedging, and you could hedge your actual stock with options. That way you can kind of come out a little bit ahead in case of, as you saw, like during the pandemic, we just had a freaking free fall for 4 weeks, 5 weeks straight. And how do you like, well, you're like, I don't want to buy more, but I don't want to sell. So then options is a great thing that you could use to hedge your positions for long-term, whether you're a 401k, shares in a long-term portfolio, whatever, So that's really why I started, and then it just became a pretty big community somehow. I've never, until recently, I haven't run a single ad. I just started running ads due to the academy being launched. But other than that, like I haven't done, everything's just been word of mouth, making YouTube videos, awesome. And just some other content. And, just try to, what I like to see is when traders come in, they're like, oh yeah, like I just couldn't win. And then they transform. They're like, man, I had my first green week, or I had my first green month, or I had, like, people are like, oh yeah, I was 100K in the whole last year, and this year I'm back to even, or I'm positive. Like it's just, it's crazy.
That's huge. So can you break down, I guess, the difference between stocks and then stock options, just because it gets pretty technical?
Yeah. So, I mean, it is like options trading. The reason why most people don't do it is because the learning curve is a lot higher. Right. However, the payout is a lot higher because you're using basically leverage. So like when you buy stock, you have a 50% chance. I mean, you could put the chart in your favor. You have a 50% chance of when you buy one share that's going to go up or down today, So that's just buying one share in a company, right? So you own one share out of the, X a million. Let's say they have a 100 million shares available. You buy one share, you own a little bit of the company. Now, one option is basically using leverage. One option equals 100 shares in a stock. So if you buy, let's say, one call option, you're actually using leverage to control 100 shares of Apple stock. If you buy one option. And the reason, and all it is like a contract to say, hey, if you have, let's say, a contract or a call for Apple at 120, that basically means, hey, you have the right to buy 100 shares of Apple stock at 120. Now, it doesn't matter if Apple goes to 150. It doesn't matter if Apple goes to 200 or 300. Because you and me have this contract, you can still buy it for $120 a share, right? And really, we're like, why would people do that? And it's called the price of an options contract is called premium. So basically think of like insurance premiums, right? Mm-hmm. Why do you pay for insurance, right? Why do you pay a premium on insurance? Why do people charge you a premium on insurance? It's like, well, in case I want to do this one thing. So when you're with your Geico or whoever, you have a contract with them and say, hey, I'm going to pay you a premium every month. And then when I need you, you better freaking be there. Right. And it's the same thing with options. It's just a contract. And the person on the other side, the person that's saying, like, let's say I had the call option that I want to buy Apple at 120. The person on the other side is saying, hey, I don't think that's going to happen. So I'm going to collect the money Nick gives me in hopes that he doesn't actually honor his request. And that's really where the market is.
Gotcha. So, I've traded options before. I still do kind of off news, where I'm not like day trading, but if I see some really negative news about something or some really positive news, you know what I mean? Like right now they're talking about the Apple smart car coming in 2024 and there's going to be partnership with this company. And so I've kind of been trading news here and there. Can you talk a little bit about just like your weekly strategies in terms of identifying trends in the market and then trends with particular stocks?
Yeah, I mean, right now, obviously, we're in an undeniable bull market. We got the bears all shook out earlier this year. We just been, as you know, been straight up, straight up, and people have been piling money in the stimulus checks. People just pile more money in, and now we got another stimulus check coming, and people are going to pile more money in. So for me, I'm not fighting the trend, but what I'm looking for is good dip buying opportunities. I'm not looking to get too short the market. I'm not really shorting anything. Actually, I'm not shorting a single thing in my portfolio right now. Yeah. And, on down days, sure, it hurts a little bit, but you get good entries. So like on the Facebook and Twitter and Snapchat took a really big hit the last couple of weeks due to obviously banning Trump. But it came down to a buy zone. So what I essentially look for, like on a weekly basis or a daily basis, let's say I'm swing trading. So I'm looking to hold a trade for 2 weeks, a month, something like that. I'm looking for things that come into the buy zone, and Facebook came into the 200-day moving average. It hit the 200-day moving average. It sat there, went below it, and then it bounced straight back up. And today, I mean, even right now, I mean, I just actually sold my position before this podcast. I mean, it's up $7 today on the day. I mean, it is ripping to the upside.
Can you break that down? So if you had a call option on Facebook and it jumps $7, profitable, basically on the profit side, what does that look like?
So it really depends on like what your delta is. And delta, it measures theoretically, it measures how much an option price will move up or down for every dollar a stock moves. So let's say you have a 50 delta call option. If Facebook moves up $1 from where you bought it, the stock, you're going to make $50 for every dollar. And then, I think that's where like things get very complicated. People are like, man, I just want to trade. I just want to trade shares because it's up or down, it's very simple, but like I mean, I've traded everything from penny stocks to everything. I've traded everything. And I haven't been any more consistent. I've been the most consistent in options than any other product on the market. But going back to your question, 50 delta, if it goes up $1, you make $50. If you have a 30 delta, if it goes up $1, you make $30. So, and I think what the biggest mistake people make, because they're like, oh yeah, like all these guys' options are mooning and they're like making 200% and stuff like that. But it's like when I do it, people are like, when I do it, I'm only up $50. I'm only up $30. I'm like, well, what was your delta? Oh, I only have one delta. I bought a one delta option and the stock moved $10. I'm only making $10.
Right.
Okay. So kind of break it down. So everything in options trading is calculated based on delta, theta, gamma. And if you don't have an understanding of that, like you're going to lose money to people like me.
Absolutely. Very quickly. You, even earlier this year, I was trading, and I can't stress enough, like risk management and discipline before the trade. Like, hey, I'm going to enter this Facebook trade and we're trading, say, at $120. And if I'm down 15%, I'm going to cut my loss and I'm going to, set up a limit to close this out. Or on the flip side, I'm going to take 40% profit. Right. And then sometimes you'll hit 40 and then it'll hit 50 and then it hits 80 and you're like, oh, it's going to keep going. And then all of a sudden you open your phone later and it's like negative 30% and you're like, what happened? So can you talk a little bit just about like risk management and just discipline and how that applies to options?
Yeah, I think the one thing that I see people lose money on the fastest in options trading is, I call it the implied volatility trap. And what that means is, especially like if you're like on Wall Street bets or any stock, like a meme stock, GameStop is a meme stock now. What other ones? LAZR. Anything being pumped on Reddit essentially is a meme stock. So like for me, people get hyped up and they're like, oh yeah, this guy, he made $1 million. He made 100K. It's because he got in before all the other guys got in. Right. And then now that the stock is moving a lot, what happens with the implied volatility? Implied volatility goes up and up and up and up and up. And as implied volatility goes up, the contract pricing goes up, right? And the biggest thing is once the stock starts, like with Tesla, like even recently.
I was thinking Tesla. I was going to say that.
Even recently, like it went from, 500 to almost 900. And then people kept chasing. Like I'm buying calls. Implied volatility is going up. And you kind of have to ask yourself, why is implied volatility going up? Because the stock is going parabolic. People don't know if it's going to be moving to the upside or to the downside. So people are making money off of speculation, right? So it doesn't matter what it is. So they start pricing the options contracts due to speculation. So risk, as the price is going up fast, risk is going up. So for the people that are selling you those options, they need to make it worth it to them to actually provide that contract to you. right? So implied volatility is going up. And as the implied volatility is going up, people keep buying, not thinking about implied volatility. All they care about is the stock going straight up.
Mm-hmm.
They don't care about implied volatility. But last week, Tesla stopped. It stopped. Right. And if you look at the implied volatility chart on Thinkorswim, you'll see implied volatility took a straight dive. And people were like, I don't understand. It's the same price and I'm losing money because implied volatility got cut in half. And that's the biggest place people lose money with FOMO, chasing, and then getting stuck with implied volatility. I mean, yes, maybe the stock is just kind of chopping up and down, going kind of consolidating and just doing what it's doing. And that's fine. But if you bought at 200% implied volatility and it's now at 100% implied volatility, you're going to be down a healthy 60, 70% on that and not understand why. People are like, I don't know, this is a scam. It's like you went into a situation not understanding, and I always say, like, once you start understanding the ways that you can lose money doing this, you'll start making money because you're going to kind of be able to move and navigate the market so that way you don't get stuck in those situations, And if you want to be in that situation, how do you stack the odds in your favor? Because there's two people to the trade here. One guy is going to make money. One guy is going to lose money. Obviously, you want to be the guy that makes money, but so does that guy. So who has better odds of making money? And that's really what options trading is like stacking the odds in your favor. And sometimes it doesn't go your way, but to be consistent, you have to stack the odds in your favor and stay disciplined when you have, setting realistic profit targets and also realistic losses. Like people will be like, they'll send me a message like, Nick, should I take profits? It's up like 1,200%. I'm like, what was your plan, man? Like you can't just you just want a 2,000% winner. And the only reason why I went up to 1,200% is because you got lucky. You just
place, right time.
You just bought and you didn't have a plan. And because it came so easy, you thought it could go up more. Right. And then I've seen people get smoked like that.
Yeah. I'm in one of the, I think it's the Robinhood options group. And there's this dude named Mason. He had like a 50 grand account and it dropped all the way down to like 20. You might've seen it, but I think he's now around 25 and I think he's following signals in a certain Telegram group. But one of the most, easy ways to explain at least stock option trading on my end in terms of strategy was like, you're setting up like you're a sniper, right? So you set up your charts, you look at certain stocks, you look at the trends, you look at support, you look at resistance, and you take your shot when, something's bouncing off support and it's going to come up or vice versa, right? If you're placing a put or a call. But they being patient and just letting it come to you versus chasing. And then all of a sudden, you start trading Tesla at 830, thinking it's going to go to 1,200 in a week. And then, like you said, you get smoked and then you're dealing with that volatility. And so, it's a whole different beast in terms of just waiting, being patient. And then, when it comes to money, it's like you start trading options, you make some money, and then you think like, oh, the more trades I place, the more money I can make. But from what I've seen, like it's a really beneficial just to be patient and kind of like let it come to you. Let the market flow, into your trade setup and then execute your trade. So there's a lot of discipline that goes behind that. So tell us more about the community that you've set up online. Is it an academy? Are there signals that are being given out? Is it mentorship?
So the community, so like the Discord, the Facebook group, I mean, between Facebook and Discord, I think there's 7,000 members. However, all that is free. Like I just wanted a place, like a safe place, because on the internet with investing in finance, everything is like mostly toxic, whether it's like, oh, you're dumb because you didn't make 20K today. All right. And people just call you stupid, or, there's a lot of, I don't know why, but especially Wall Street bets, there's a lot of racism. There's a lot of stuff like that. So I'm like, I just want to create a safe place for people to gather. And if you don't want that, then don't come, So essentially, there's actually quite a few great traders in there, all different experience levels. Obviously, there's a lot of people that are just like, a lot of the people are just kind of like flies on the wall trying to be like soak it in. Absolutely. And then, so that's like all the stuff you could do for free, YouTube, all that stuff. But then like people kept asking me, is like, I like the way that you explain options. So I built the academy for the people that wanted to take it a step further and say, hey, I want to start from scratch. I don't want to have to go through 10 million YouTube videos from 14 different guys. So basically the academy, I didn't want to just create a static one that you could just like Google on YouTube and say, oh yeah, I'll just look up that definition. Really what it is the training course actually is like a journey for you to identify for yourself what you're good at and what you're not good at. Because the biggest thing that I find with trading is that people try to apply their strategy to different people. And sure, I think it's great to learn from I learn from a lot of different people, right? But it may not work for you. Like for me, like maybe I have more time to trade. Maybe you're working all day and you're like, I have to research.
9 to 5ers.
Yeah, yep. It's like I have to research at night and then put my trades during lunch hour or set alerts or buy orders like after hours and hope they hit, So like my strategy, I think it's good to learn from people like me, people like you, people like different people, and find something that works for you. But I found that a lot of trading has to do with who you are in terms of your personality. Are you greedy? Are you a angry person? And honestly, I found more about myself trading options than I did like a lot of other things. So it's like, why did I do that? Why did I make that trade? And it had nothing to do with my technical ability. It's because of me as a person. It's like, why did I sell that? Why'd you get scared? And that's really what the journey that I wanted to build was. Figure out who you are, figure out what you're good at, and do that. Like you're not going to be good at every single area of options trading. You're just not. It's impossible. People like different things. And that's okay. But you have to find out what works for you. So that's really what I want to do is just create a journey for you to identify. Obviously, it goes through the basics, but it also goes through all the strategy saying, hey, if you're this type of trader, this is the type of strategy that you might want to look for. If this is the type of trader, use this, and try to make it easy for them to really identify what they're good at, what they're not good at, and apply a certain strategy to what they're good at. Because a lot of people just don't know like what strategy to apply at different times in the market, right? So that's really what it covers, and just try to get them from going from a red to green trader. And then also I do they're not alerts or anything, they're trade ideas. Basically, a couple times a week, I'll send out a trade idea saying, hey, I'm looking, and I'll put the trade on. And I'm saying, okay, this is what I'm looking at in the market. This is the option strategy that I'm looking to do. This is the profit target, and here's the loss target. Set realistic expectations. And when do I want to take this trade off run? Like, how long do I want to let the ride? Like, how long do I expect to ride this? Sometimes it works out, sometimes it doesn't, but really try to give that real world approach. Because I think with trading, a lot of people are like, hey, it works in your nice little lab there, kind of like college, everything worked great in class, but I came out to the real world and the sharks are just tearing me apart. It's like, they didn't tell me that, college told me they were preparing me for my future, and I don't know what I'm doing now. And that's that's the biggest thing that I want to prevent is like, once you're done taking the training, you're like, oh yeah, I'm going to crush it. How do you apply it to like in the real world? And I think that's the biggest difference. I haven't seen that like in the options trading world yet. So hopefully I'm the first, I don't know, but that's really what I wanted to accomplish is just give people a safe place, ask beginner questions, learn, and then apply that to the, in the real world where we're making or losing real money,
Right. What's the name of the Facebook group?
It's just options trading with Us First Heard.
Got it.
Any YouTube video, got a bunch of links in there.
Us First Heard. Yeah.
Yeah.
Okay.
Yeah.
Cool. We'll pull you up and we'll get you plugged into my Facebook group. I'll leave it in the comments when we post this. Sure. Any advice to like, maybe someone's been trading stocks or maybe they're just buying and holding on Robinhood or whatever, and they want to try out options. What amount of capital would you recommend they start with? And any insight into, percentages of like, if I'm going to start trading, what percentage of a loss should I cut off at? And what percentage of profit should I aim for? Just as a general rule of thumb.
Yeah. So if you're looking to trade, generally you want to have like a $2,000 to $5,000 account for options to trade safely, because you don't want to be like, a contract costs what it costs. It might be $100, it might be $500, depending on what stock you want to be in. It costs what it costs. So, you don't want to put all your capital. I mean, I have people come like, hey, what can I do with $100? It's like, you probably should get like a side gig, bro, because it's going to be a rough ride. Because if you lose on one trade, you're not going to be able to adjust that trade. You're just going to have to take the loss, and then you're going to have less to work with, and then you're going to have less to work with, and then you're going to go to zero. Like the worst, I've seen people put in $100, lose it, $100, lose it, $100, lose it. Just start with 5 or 1,000 and work that way. It's better than starting with 100. So, safely 2,000, 2 to 5,000. But if you literally know nothing, I definitely recommend downloading Thinkorswim, using the paper trading platform that they have and applying that to the market, because like you can't just watch one video on YouTube and say you're an options trader. Like it's just like it's not good. You can't. I mean, you might get lucky, but like you want to have longevity in this game. Like people are like, well, you don't make X amount of money, you don't do this, you don't do that. Yeah, but I'm going to be here year after year after year, when a lot of these traders I don't hear from people ever again. I know a trader that lost 46 grand last week on Tesla, and he's like, I'm going to be gone for a while, guys. Like why?
Yeah. So when I was trading earlier, and it's like, when you have profitable trades, it's like, I don't know, there's a lot of emotions that go with it. And a lot of people are like, listen, you need to control your emotions, right? So trading options, you're up 150%, you're closing out your positions, you're green all week, you got a few red trades, everything's good. And then like you start having some red days, and it just like creates doubt. It's like playing sports, right? You're in the playoffs, you hit some shots, you hit a game winner, life is great. You start missing crucial shots, and then you just feel like a loser, right? So there's this, so paper trading is when you're trading with like real values, but not real money. So you're trading options with the actual Facebook, Tesla price, SPY, all these different things, but it's just fake money. So you can actually see what you would trade like in the real world. But yeah, so doing that definitely, I tell everybody that. I say paper trade. I think
the worst part about it though is because it's not your own money,
you don't feel it.
You don't get the emotional triggers.
Yeah.
I crushed paper trading. Now I'm losing every day. It's like, okay, so you need to like for me, and I think it just comes with experience, time after time after time after doing it. Like when I place a trade for profit or loss, like I don't feel anything. It's like, it's just like, for me, it's just business, whether I made money or lost money. Like if you're at work and you do a transaction, you don't feel anything. Right. And that's really where I think most people should try to get to with their options trading journey. It's just a business transaction. Like really, don't get too emotional, but I think that people too much thought into how much time it took them to make that money. But the market doesn't care. Time and the money is irrelevant. You can make 100,000 in 1 minute, and you can lose 100,000 in 1 minute, and it could take you 100,000 to make it in a year, at your job. So like, I think that's the biggest disconnect, is the way we're brought up is time equals money, time equals money, time equals money. But that's not necessarily relevant. I mean, sure, time in the market is definitely better, and you'll see your gains. But for options trading, you really can't use time as an indicator to how much money you can make, because you could scale up or scale down whatever amount you want,
Right.
But in terms of profit targets, to answer your first question, for day trades, I'm really only looking to lock in 5 to 10% in my day trades, and
profitability.
Yeah, because I'm looking for very consistent wins.
Right.
And then for swing trading, I'm looking for anywhere between 30 to 50%.
Gotcha.
For losers, I like to cap at like 20%. And then for day trades, I'll take off at 5%.
There you go. That's pretty conservative.
Really try to, if you get crazy with options, you're going to have massive losses. Like my goal is to not have major swings in my P&L. I may put up more money, but if I'm making 10% on $2,000, I mean, in minutes, I mean, that's enough. That's enough. Like you have to be content. And I think that's where, like, what amount of money will you be content with?
Right.
Whether it doesn't matter what you're trading, what are you happy with? Like people are not content is the biggest issue.
Yeah. I think
be content.
Yeah. I think being disciplined and having that plan beforehand, saying, I'm going to cut at 20% and I'm going to cut at 20% gain, like either way. When you do that, it's like, all right, I'm sticking to my plan. And when you get that, it's like, all right, I'm happy. And it avoids you being greedy, wanting to, take an 80% gain or whatever. Well, obviously, if you place an option, say you're placing a call or whatever, oftentimes I would see people take, 40% on one contract, and then they would just let the second one ride. And if it profits even more, you can close out later. And if it comes at a loss, you still are in the profit, in the money, right? So,
Sure.
Yeah, it's definitely start off, if you're listening to this, definitely start off paper trading, definitely start off researching, get a book. There's a lot of good books on options and how they work. But you won't get the emotional feel until you're actually playing with your own money. From what I've read, people are like 5% or less risk of your total capital per trade. Because if you're doing 10%, 20% of your entire money that you're trading with, like in a few trades, you could just be out of money.
Mm-hmm.
You know what I mean? So starting small is usually good.
Yeah. I mean, if I think just getting disciplined on setting a realistic loss, like you don't want to think about it. Like people just ignore the loss part.
Right.
Like just set a realistic loss. And if it hits, man. At least you get to keep 90% of your money,
Right.
and,
Right.
That's the biggest thing.
And what platform are you trading with now?
Tastyworks.
Tastyworks. Okay, cool.
So Tastyworks I find is the easiest for their charts are pretty bad. So I use Thinkorswim for my charting.
Yeah.
But options, it's an amazing platform. But the people that built Tastyworks, they don't really value the charting aspect. So they try to push that belief on their community, even though that doesn't. And that's why I say you really have to find out what works for you. Yeah. I mean, even through the platforms, they try to push certain agendas and stuff like that. It's like, hey, that's not really what I want to do. You know?
Right. Now, when you open a new position, do you set an auto order to close at a certain loss, or are you watching that by hand?
No, I mostly just I don't really set stop losses in options. I mean, I set a stop loss mentally, but I don't actually put it in. I don't actually put it into the platform. And the reason why is because options pricing is very violent, and a lot of times they tag those stops left and right, like very easily.
Yeah.
Especially if you're trading with like for me, like if you have a tight stop 5 to 10%, like it could flash for literally 1 second. Go back up, and it taps you out, and you instantly would lose money. So for me, I manually control the process, because with leverage, you could be down quite a bit of money. And if an option's moving 5 to 8% within a few minutes, that's pretty normal. Normal,
especially at the bell at open.
Yeah, and that's why one of my rules: I don't open a new position the first 15 minutes of the day. Like I just don't. I'll start closing positions out if I'm looking good, and I hit my targets, but I'm not going to open a new one just because of the ranges. I mean, I've seen some crazy things, like you could die.
I was chatting with another friend who trades, and I remember like the day before looking at what was red, what was green, and then watching, whatever red stocks I'm looking at the open, just to see them swing and like big movements just out of nowhere, or obviously movement overnight.
Yeah. I mean, I've seen Amazon, Tesla move 100 points in the first few minutes, like crazy stuff that will make you go to zero instantly. You're like, why did I? So I just stopped trading the first 15 minutes of the day. I'm like, okay, I'm going to use the opportunity to sell my positions if I hit my targets. If not, I just relax. And I think that'll help a lot of people. Just relax. Yeah. You don't have, the trade will come. You don't have to make money like that.
Right. Right. Yeah. The whole let it come to you, be a sniper when the shot's there, take it. Right.
Yeah, exactly.
That's how I kind of look at it. But yeah, the markets move everywhere. And I think especially when you're new to options, you're like, when you see a stock go up, you kind of just get FOMO, right? Like, oh, Amazon is soaring right now. Let me get in on it. And then you chase that top, and then you're buying at an additional price. So you're getting beat on that end, and then it drops. and all of a sudden the profit that you wanted isn't there. So definitely let the trades come to you. For someone, I guess, looking to, they're new to trading, they would check out your Facebook group. They would check out your academy. What's the rate to get started on the academy?
So it's right now I'm just doing like lifetime one fee, which obviously is I would say giving away, because I'm continually giving like the research, all that stuff.
Yep.
But it's a 1,000 flat fee.
Gotcha.
And then there's monthly split in for lifetime membership, but just trying to keep it simple. Obviously, want to onboard some people, get people to use the service and actually say what they like, what they don't like. And so far, I mean, I've had some pretty positive conversations. Obviously, it only came out 2 weeks ago, so the amount of content that's there is taking people what it takes. So I don't expect people probably to finish for another week or two, and then get some more feedback from there. But so far for like the options trade ideas, like the research piece, I mean, so far I'm 2 for 2 trades in 2021, which is just January. So working on that. So that's up. The training, and then we also do like the impact report. And what the impact report is something that I use every week just to kind of get me prepared for the week. And it creates a list of all the news events, whether like this week's inauguration, whether it's like, hey, maybe some Federal Reserve speaker is going to come out this week. Maybe I don't want to do so much, or maybe some certain numbers like earnings, stuff like that's going to come out. Maybe I don't want to trade Facebook this week because they have earnings, because I don't know what they're going to say. So I really just try to create an experience for people to make the decisions for themselves, and then also just manage their risk in an appropriate way.
All right. Do you typically swing trade in earnings on certain companies?
The only really trades I do for earnings is selling premium or shorting premium to people. So I don't ever really buy options going into earnings.
Gotcha.
Like ever. I take advantage because like I said before, like the implied volatility. So implied volatility is high before earnings because people don't know what's in the report. So I pretty much trade the implied volatility crush is what I'm looking for. So even if the stock doesn't do anything, the options will be worth less the next day because the event is over.
Gotcha.
And I collect that money.
There you go. And I guess do you typically swing trade? Are you trading like they have obviously naked calls, naked puts, or are you trading vertical spreads? Or what's your common approach week to week?
Yeah, so for swing trading, I like to do a lot of debit calls or credit put spreads. Right now, I am shorting some naked puts in some stocks right now, and then I am swinging some naked calls. But for most of it, I try to have more defined risk for overnight, just because options. I mean, options are risky.
Yeah,
essentially. So
absolutely.
I try to reduce the risk, and I'll start doing naked calls on something if it's like I know it's a for sure thing. Like but that's not like my go-to approach for swinging. Now for naked calls and puts, I do a lot of those for day trading. Like I'll do them because I put the risk on, I take the risk off, and whatever happens overnight is what happens overnight. Right. So day trading, I since I have more control during the day, I'll do naked calls and puts during the day, and then swing trading, I'll rely more on spreads and stuff.
Can you define, I guess, the difference between trading naked puts, calls, and then spreads?
Yeah. So essentially, like if you're in a spread, you're long one option and then short one option. So like the two kind of work together, whether they hurt you or help you, right? But you have more consistent wins and more consistent losses with it, because let's say if one option is making money, the other option is losing money that you have in the spread, and it's kind of offsetting it a little bit. So your losses, even let's say Facebook did a $10 drop, you're not going to feel it that much because you have smaller delta exposure and the one option's offsetting loss from the other option. Now, if you're in a naked call, you're exposed to the whole thing. Like there's nothing offsetting it. You bought the contract, and if it goes, like, let's say you bought a call and Facebook goes straight down, you're feeling 100% of that drop, 100%. Right. So that you don't have, it's not the defined risk is it goes to zero. in that scenario, which is not good. So,
yeah.
I mean, if you look at when you're looking at the difference between a spread and a naked call, like I definitely encourage like going to a platform. Okay, if you put on a naked call, look at how much delta and look at how much gamma you're exposed to, and then do the same thing for the spread, and you'll see that in the spread, it's a much lesser number. So that's why you're not going to get hurt as much. You're not exposed yourself to high delta or high gamma, stuff like that.
Gotcha.
Because you have the other one offsetting.
Right. So with the inauguration coming up, with more talks of stimulus, and I mean, I'm looking at the S&P 500 just over like the last couple months. We're just, going up and up and up. Back in November, we were at 325. We're in January, 375. With this trajectory of going up and up, would it be, I guess for a newbie, would it be wise to place maybe a call for end of February somewhere in the 385 range or something like that, just as like a long-term swing?
For a spot? Yeah. I mean, the market is starting to price in, obviously, with the vaccine, more of the economy opening up. And you could say, oh, that stuff's already priced in because we had an enormous run. But the only reason why we had an enormous run is because we dropped so much. Right. So if you think about, I mean, I'm in Illinois, so it's extremely strict right now. I mean, we have nothing open. We have nothing open.
Yeah.
So if you have a big market like Chicago opening up, the possibilities are pretty high. So the biggest thing is not to chase, but I think that since we're in the early stages of opening up and the vaccine, I think 2021 will be a good year. Will it be amazing? I think the thing is, I'm a little bit concerned about the people that got laid off, which jobs were automated and which jobs we don't need anymore. Because in 2019, companies were just hiring a frenzy. I mean, we had 3% unemployment. Things were just going crazy. People were just hiring just to hire people for no reason. And then they realized, like, hey, we could do that guy's job with just one person or software or whatever, automation. We don't need to bring back 1,000 people, you know? So if one company does that and then another company does that and another company does that, like how many millions of people are going to be looking for work? And I think that's my biggest concern. I don't think the market will, really drop that much on that, especially if, if we're just printing money out of thin air and inflation's going up. Obviously the market's going to go up and other assets classes are going to go up as well. So, I mean, yeah, I think once SPY can get out of this range, like, I mean, it went up and now it's basically stopped at like 380.
378.90.
Yeah. Once we break, I think it's going to go like, not investment advice, of course. I think it's going to go 400 relatively quickly, especially if we have more liquidity. If people are like, oh yeah, I just got this fat stimulus check, I'm going to go throw it in the market. I'm going to buy some stock. We're going to be good. Then, I mean, I think it'll be good to pump the market. Now, long-term effects, I mean, that might not be a good idea, but right. For the next 6 months or so, I mean, just kind of ride the wave and then just use your own judgment for risk.
Right. Nice. Now, speaking of more money being printed, do you trade cryptocurrency at all?
I'm not really a trader, I would say. Gotcha. I'm more of a holder.
Buy and hold. Okay.
Yeah, cool. Because I mean, I don't have the flexibility. I mean, I think that what I really want to happen here in the next 2 years or 12 months would be ideal. Have some amazing crypto ETFs that you could trade options on in the market that tracks it. I mean, they have Bitcoin futures, but the liquidity is not that good. Also, the amount of money, capital you need to actually trade that is very, very, very high. Right. So I don't like that aspect. So we need, like on the market, we need more investment products to do that, but I don't know if they will, because that means they're saying that crypto is going to be a thing, Right. So the banks are kind of saying it will, but then actions kind of will back that up. It's like if they launch 20 crypto ETFs that I trade like SPY, that's what I would like. Then I would have more flexibility for day trading. But in America, you have to go with some shady exchanges to like if you wanted to be short Bitcoin to hedge and do this kind of stuff, like you have to do.
You got to use a VPN, reroute your VPN to United Kingdom.
Is it really worth it to me? So for me, like I just buy and hold, and that's really all that I do. I don't really. Nice. I need more products to actively trade it.
Gotcha. Cool. What's in your portfolio, if you don't mind me asking?
I just have Bitcoin and Litecoin.
There you go.
So I'm just I don't really mess with the altcoins, man. Like, that whole thing. I mean, the whole it's like the penny stack of crypto.
It is.
I mean, it's like you got a coin called Poet.
Yeah.
Like, nah, bro. Like,
there are so many coins. It's cool because there's like there's white papers on a lot of them where they're like, this coin was created for this purpose. Like Akon creates a city in Africa and it's going to be powered by Acoin. Like, that's super cool. So, I mean, ever since that was announced, I'm like, I'm going to keep an eye on that. I think it went public recently, but you can only buy it in certain places. But yeah, essentially it's easy to look at them as like penny stocks, and some of them can go to nothing. So typically I'm similar. I'm obviously bullish and big on Bitcoin, Litecoin, Ethereum. Those, I mean, any coins that are in the top 10 market cap, I think are safer bets than, the thousands of other coins. So I obviously think that's a good place to start. But
what do you think about what they're doing to XRP?
The SEC's got involved. I had a big position in XRP, and then as soon as I saw that, I was like, all right, I'm shorting a lot. Not shorting, but I'm basically selling off a lot of my position. I probably traded up to probably Bitcoin or Ethereum. I think once the smoke kind of clears on that, if it does clear and it goes well, I think XRP still has a promising future. But I think
Coinbase said they're halting trades on it. Was it today? I think it was.
19th. Yep. Yeah.
I saw that, and I still saw XRP going up. I'm like, and I think, like, for me, like on the crypto side, and really why, like, I'm not like all in crypto.
Yeah.
My main thing is like what, like the SEC, like Coinbase. They can crack down on, like, they don't have to crack down on the coin.
Yeah.
They can crack down on the exchanges, and that is like my biggest fear. I mean, what do you think about the government getting involved with like the exchanges in that way?
I think, and we've been having this conversation on the Talking in Bits podcast that we've been talking about, just storing your money on exchanges. It's essentially a hot wallet, right? If the SEC was to come in and seize Coinbase, what happens to your money that's in your Coinbase wallet? So I picked up a Nano Ledger recently just to have, coins on cold storage that are basically inaccessible. But yeah, that's one thing to think about. I don't think the SEC will come in and shut down Coinbase. They have an IPO coming. So they're talking about going public. So I don't, from what I see, I don't think the XRP thing is that big of a deal that they would like shut down Coinbase or something.
While we were talking, I got a news alert. So Janet Yellen, Biden appointed her, and she was saying that it's being, obviously we've known this, but she's saying, and she's coming in hard, that they're using crypto to money launder and fuel fund terrorism.
Right.
Now, as you saw with the Capitol riots and stuff, as soon as you throw terrorism into the sentence, it gives the government the ability to do anything they want. If they think there's some sort of, whether it's foreign or domestic terrorism, they're going to do whatever they want to that exchange, whether it's right for that exchange or the investors or whatever. They're going to, and I think that, and obviously the people that are saying this stuff are much, much older. So I'm just trying to figure out, do I want to put a lot of money there, or do I want to do, it's kind of like a, I mean, if you take your funds and put them into like cold storage, you should be fine in terms of that. But yeah, there's chatter of that. I think in the UK, they're trying to ban you from
depositing your crypto profits into your bank. And there's some stuff like that. But yeah, the same people who say, you know, Bitcoin and terrorism, these are the same banks that have been laundering money for the cartels, notably. And their only punishment is, you know, oh yeah, just pay us 100 million, 200 million in fines. So they say these things, but I think obviously they're just scared of the liquidity getting away from them. And, you know, the people saying we want Bitcoin as a store of value and not the dollar.
Yeah, I mean, I could definitely see like when logging into like, let's say a Bank of America account, you see your checking, you see your savings, and you see your crypto account, you know, and then syncing that with your debit card or whatever you want. Like I see that's going to be on the horizon, but I think there's a lot of things that need to happen for them to do that.
Right. Yeah. The Bitcoin rewards cards are coming, which is pretty cool. So I think it's only a matter of time before Visa kind of gets in or others kind of get in and say, you know what, we want to do Bitcoin rewards or, you know, whatever.
Yeah, because you have PayPal and Square backing that. So, you know.
Yeah. And that's another reason why we're kind of booming on that end. But yeah, wrapping up. So next steps, people would go to Us First Heard. Is that .com? Yeah.
I mean, you could search everywhere. You can Google it.
Gotcha.
I mean, there's really nobody with that name.
Yeah. It's distinct. I remember seeing it.
usfirstheard.com.
Dude, you were killing it on YouTube. 19,000 hits
YouTube
or subscribers. That is awesome.
Yeah, it's been a grind, but it's a fun ride.
Yeah. Now this is your full time now?
I still own a IT company as well.
Wow.
Yeah.
Wow, man. Love it. Awesome. Nick, well, thank you so much for joining us today on the podcast. I hope, you know, some of the folks in our group visit the website, join the Facebook group, and, you know, are able to learn from you.
Yeah. Thanks, man. Thanks for having me.
Glad to have you.